Hello, Warriors. I hope everyone in the U.S. had a nice holiday weekend. It's really great that I'm going to be able to share my work on FX Street now. And for those of you hearing me and are publishing our work on FX Street, invite everyone to join us, to collaborate with us on TradeGateHub.com. You come in here and you share your charts, and we go over them, and we're developing a mastermind community. So if you're interested in doing that, it would be, great to have you. So don't isolate, collaborate, and my style during these videos will be educational analysis. So it's not just the analysis, it's the hows and the whys and the reasons for why I have a bias in a particular market, so that it's not just, buy this, sell that, but you learn the reasons behind what is compelling me to take risk in the market. And I do focus a lot on RSI and three drive formation inflection points. So good to be back on FX Street. It's been a while. Used to run a live analysis room there for a few years, and it's a great community, and glad to be back sharing my work. So let's get started with what happened with the dollar on Friday. On the jobs number, it was kind of not too hot, not too cold, just right in the middle between the real number, what people were expecting, and the whisper number of 1 million jobs, and we came in around 800,000. And even though that was a little stronger than expected on the number, the dollar sold off on that. This is the action you saw in the dollar. We actually had a pretty good reversal day. Here's your daily on the dollar. And the dollar is actually giving a lot of getting back a lot of the losses that we had from Friday. So, I could make a case that we could head up and make one more high before a bigger correction takes place. One of the reasons is the weakness that we're seeing here in euro. So, euro had the weakest rebound on Friday. Just a quick review of Friday. Here was Friday's rebound in euro. Much sharper recovery in pound dollar. Um, the star of the show Friday was the recovery in Kiwi and Aussie. Okay. And uh, Canada sold off, but trying to recoup its losses from Friday. So let's start with the euro. So with the euro trading down here at 1830, very good possibility that we could see one more low in the euro. This is a pound, and we're almost there. So there is a possible setup with divergences. So let me talk to you a little bit about RSI. So a lot of people use RSI strictly for knowing whether or not you have an overbought or oversold condition in the market. I use it a little differently. I use it to tell me whether or not the markets are confirming new price highs with momentum, and that gives me a course of action and a bias what to do. And then also looking for divergences and a lot of three drive formations. So this could have been drive one. As you can see down here, the RSI did confirm, and any reading under 20 is really a lot of downside momentum. So even though we got a bounce, the fact that it was a confirmed low told you that you were going to have another low. And that's what it did into Friday before it turned. Now you notice the RSI here at new lows, it's glaring between the prior low. Should we get a new low sometime this week, maybe tomorrow or the next day, we'll have our second non-confirmation. So euro could be setting up for some type of counter trend rally here after making new lows. I would not be pressing the short side. I'm not even really convinced that I want to be long the euro, because the euro is the weakest. And I explain it this way. Our job as traders, our biggest task is trade selection. So you could be right about dollar direction, but if you have not analyzed the market to have show what is your strongest currency, what is your weakest currency. Then, because of that, you may make a poor selection on your trade. Similar to like in singing competitions, and people that know me, know that I fancy myself as a little bit of a singer, but on the competitions, it's all about song choice because you could have a great voice, but if you choose a song that doesn't fit you, your performance will be affected by that. So, what I try and do and what I teach is to identify the relative strength within certain complexes, within currencies, within metals, within different sectors and stock indexes. And right now, the euro is near the bottom of the ladder on the verge of making new lows, but I wouldn't be pressing the short side here because of divergences. Um, what could happen is we get a new low in euro and we get a higher low in cable. Now, longer term, I'm looking for a 128 cable, but why can't we put in a higher low here sometime this week and the dollar come off again and rally back towards 140 one more time before a bigger flush? Really, the key to me, from what I'm seeing here today, and I'm going to talk a little bit about correlations too, and how I look at different asset classes, and if they give me market tells for what I should be doing in currencies. And I know many advanced traders already know this, but the direction of US dollar yen has a lot of impact on yields. So here's the yen selling off here. And as you can see, the 10-year is selling off again today. Okay. And I can see the yields heading back down towards 120 to 110. So that's the confluence of this speed line and moving average. So if I think yields are going lower, and yields are everything when it comes to especially commodity prices, this opens the door for the rally we're getting in gold and silver. Silver displaying relative weakness. I think silver is going to be a short if we get up towards 27. But the yields are telling me that the yen is heading lower, at least till we head into this yield level right here. And what's interesting about the yen today is even though we have dollar strength, right, against the euro down 34, we have dollar strength now, the cable is down. Normally on a day like this, when the US dollar yen is in bull mode, it would be up. So we've had about a 100-point break in US dollar yen. And, we did have a confirmed high, so you can't rule out another high. But the way I see things now, I would be the yen should be higher today with a stronger dollar, right? Dollar index up 21. And yet it's not. It's still down 26 with the dollar recovering. It's pretty weak. I would sell a 50 to 61.8% retracement up around the 1120 and cue it with stops over the high and look for really some type of fib retracement. And you could key off for when you think it's right to cover the short in the yen would be keep an eye on the 10-year yield. And once we're around this 120 level, that may be the end of the yen decline, US dollar yen decline or yen strength that I think could take us back down towards the 109 to 108 level right here. This could be very important support. And what's even more significant is that it looked like a breakout and we could be negating the breakout. And let's go to RSI again. So here's your daily. And up here, we did confirm the high. See this new price high with a reading of 81 and a half. So momentum confirmed this high. So what does that tell me as a trader? Anyone know? Hello, G. Dory. How are you? Angle, how are you? Daniel? What does it tell you when both momentum and price, and momentum is confirming a new high in price with a new high reading on RSI? I call this a confirmed high because the momentum is confirming the price action. So what do I do with that information? So knowing or believing, because I've seen it for a while, that markets rarely peak and they rarely bottom when momentum is confirming its move to new highs or new lows. So it ends up being a top or a bottom rather than the top or the bottom. So knowing you had a confirmed high back here at the end of March told you as a trader, where you have to use some of your other tools, that I need to buy a break in US dollar yen because we have a confirmed high here. So the probability of this being the high is fairly low. And that turned out to be correct. And now here we are making new highs, right, on the daily. And look at the momentum now. 68.35 compared to 81, I'd say that's glaring. In fact, in an example like this, these two RSI readings right here, you'll have to use your cursor to see if it confirmed. Those are not real clean and important divergences. If you have to move your cursor to get a reading, then it's too close to call for a divergence. But if I know that the last high on the daily chart we're looking at the US dollar yen confirmed here, and that we're going to have a new high, here's where we started getting new highs in here. And as you can tell, momentum was well off the last reading, pretty stretched out in time, but we're not confirming new highs here, which leaves it ripe for a correction. And looking to sell rallies this week in US dollar yen, wrong over Friday's high, and gives me confidence that on a day the dollar is strong, the yen is still weak. So um, people would say to me right now, and I used to do this, but don't do this at home. So they'll say, Dale, well, if you want to be short the yen from 1120 or so, why don't you just buy it here and ride it up to 1120 and make money? Because that's not the trade. What if it doesn't get to 1120? Okay, I know what I'm going to do if it gets up here, but it doesn't mean that it will, right? So I used to think I was so great that I could trade every wave. And in fact, you guys all have to listen to Tom Petty. The waiting is the hardest part. Being patient and waiting for the right setups and not forcing trades. In fact, your best trades are going to be planned over the weekend. So I knew I was going to be looking for yen shorts this week on Saturday. Okay. So after Friday's close, it hasn't presented itself because I'm not going to chase a 100 pip decline. Never chase markets, let them come to you. In fact, here's something to write down. I'm going to miss trades every day, and that's okay, because there's always another trade around the corner. So take the pressure off yourself. Great traders miss trades. Great traders are wrong. There's going to be times I'm going to say I was wrong. And you know what? It is also okay to be wrong, not okay to stay wrong. Okay. So let's move to what was really the star and had the best counter trend rally were the commodity currencies. And Kiwi, if you notice, did not make new lows, while the Aussie did make new lows. Now, I still view this rally as going to present a shorting opportunity. I'd like to see in the coming days another push up towards the 76.5 level, 76.20. The market's memory is to the left. And when you look at you go left, you see what an important pivot point the 76.50 level was for the breakdown. And we're fading here. Maybe it's just going to go from here, but I'm going to be patient. You know what? If I miss it and it breaks from here, so be it. That's the Aussie. And the Kiwi is acting better. I'd wait for 76.14 and told my mentees that you could be long looking for this in the Aussie. So the correlation with Canada, and Canada is having a great day. In fact, I thought there was going to be a chance to be able to buy it down here, but it looks like we're just going to get some consolidation. And does anyone know what I correlate Canada with besides looking at their cousins, the commodity currencies in Aussie and Kiwi, and why Canada has been so weak until the recent low? Well, it's been because of WTI. And if we're going to have a correction in WTI, and there's you know people talking about $100 crude, $140 crude, taking us back to the highs that we had a few years ago. Let me break out my telescope for the energy market. But strong crude prices are positive for Canada, which means negative for USD CAD. So here's the monthly chart. We're into a new month, and this may be the month that we get this correction in crude. This is a big breakout, and took place at about $61 on the crude on a monthly basis. On a daily basis, we really did not diverge here. See that? It was a new high confirmed on the 4 hour. Pretty good divergence, close enough. And I look at this right now, and could there be another drive, a third drive? Let's take a look at the 2 hour. 2 hour did diverge, but you'll notice as you watch these videos 3 days a week, one day a week, I'll be interviewing experts. In fact, our guest on TradeGate Hub this Thursday is Peter Goodburn, one of the better Ellioticians that I know. I've been interviewing Peter for many years, in fact, going back to when I was on FX Street. So don't miss that. And the oil is, giving Canada some tailwinds. And I was expecting this, okay? A simple this, and got out of my longs in Canada before the NFP. That's something else I'll talk to you about. Being flat into major news like central bank news and NFP news, because it's a binary bet. It's red or black, and we're here to trade, not play roulette. But there still is a possibility that I get something like this from here, and that's going to depend on whether or not crude can recover or not. And right now it's looking pretty heavy, but look at what we're holding right here on the 4 hour. So we're holding the 50-day. I use the 50 and 200. Why? Because everyone else does. I want to know what the majority of traders are looking at. So Canada, I'm going to be patient. I'm not going to chase it here. Think that there's still a chance that I may be able to buy it at 122. We start taking out 4.5. That's going to look less likely. But bullish Canada, some long-term objectives in Canada, just in case you guys are long and going to stay long, are back here at the 130 level. Okay, so 130 to 132, I think, is viable. And if we start closing back under 122, 120, 160, that would abort it. But Canada looks good. And it had this move. See this happening last week before oil topped. The oil high was last night in Europe. So even though oil was continuing to trend up, a couple of weeks ago, the character of Canada changed when we had this breakout after holding the big round number of 120, and crude was still going up. So what was the market message for me then? The market message was, you know what? On a day when crude is up a buck and a half and Canada is not lower on the day, and all the way down in Canada, there'd be days where crude was lower and the dollar was stronger, but Canada was so weak it was still lower on the day. If you are a loony trader like me, you would have noticed that even on the days when the dollar was strong, USD CAD was still weak. But that's the character of the market started to shift down here. And in fact, this is a wedge line. right? Okay, so what happens down here is what I call a throwover. And the signal was once it got back into the wedge, back into the formation, this candle was a signal. And it was taken, and we had a nice run, booked it. And because we had confirmed highs, I bought this pullback. It wasn't anything genius that I got out before this candle. I just wanted to avoid not knowing how the market would react to the NFP. My belief is that you react to the reaction. So you come in prepared on major red news events to react after the news is released. In fact, I could remember a time when even on FX Street, when I was running LAR, the live analysis room, that we had an NFP number. One of the members of the community said, Dale, I bought the euro before the number, and the number came in weak, and the euro rallied 100 pips. Yes, the euro used to move 100 pips at a time. So, and I made money. I got out. Do you know what my response to him was? Good guess. Okay, because that's all it is. It's a red or black bet. It's binary. Really doesn't have anything to do with being a trader. It's just you were right on your guess that the euro would rally on a weak number. Could have been a strong number. And I tell you what, he wouldn't have come back to me and said, Dale, I got long euro and lost 100 pips. So, you take everything with a grain of salt. One of the important pairs, whether you trade it or not, and we're headed towards the end of this particular session, is the euro pound. And even if you don't trade the euro pound, this helps give you your preferred long and short. When euro pound is heading down and you're bullish a dollar, it makes the euro your preferred short. And if you think that the dollar is going to come off and weaken while euro pound is heading down, the pound is your preferred long. And like I was showing earlier, um, it's obvious with the fact that the pound is not making new lows yet. Maybe we get a 3 down here. It's possible, but the pound's only down 9 pips with the euro down 33. So having the direction correct on euro pound is very important for your preferred long and short. Euro pound is approaching some support. We're not there yet. I'll be looking at it to see what happens around 84.80. Otherwise, we're looking for new lows. That's right around the old lows. So I don't know why they wouldn't go for the stops here. And that's something else that I want to talk about. The pound, I was talking about that the pound is a relative strength, and if there's going to be more of a dollar correction, it would be a preferred long, G. Dory. Okay. And someone sharing their count on WTI, very interesting. So I encourage everyone to come into the room and take a look at what the community is providing when I'm talking. And, we could go back and forth, post your charts, and I could take a look at it and we could have a discussion. The other pair that you have to look at, especially if you're a precious metal trader, is the gold silver ratio. Now, right now, it's not telling me anything, but on the way down, back here where you could have gotten for 1 ounce of gold 125 ounces of silver, since we tagged this level here, we've been moving sideways for months. So this isn't really giving me any indication of what should be my preferred long or short. It was your preferred long when this is happening is silver. And when it's bouncing, your preferred long is uh, gold. Okay. So depending upon which direction we go, either down for a third drive to a bottom or start closing back over this 68.50 level. Here's the third drive. It's going to come in under 60 at about 55. And, maybe we'll have some divergence there. But very important. I know that you guys have seen days when gold's up 20 bucks and silver's not performing. We're starting to see this again. So my view is that the correction that started in gold, basically just from jawboning, right? That it was really just the Fed saying what they're going to do someday, really took the starch out of precious metals. It broke what a lot of people are calling a weekly breakout right here. And gosh, I have so much to teach and share with you guys. We'll be able to cover how you handle false breakouts as well. But gold took a pretty good hit on just jawboning by Powell, and so did silver. Silver trying to hold this 200-day moving average. I still think there's downside. I'll be looking to back up the truck in silver around $22. So I think the correction, I'm not calling a bear market in the precious metals, but I still think with more upside in the dollar, which I showed you the Canada objective, right? That I thought that we could get back to this 130 level up here. I believe before the dollar becomes a better sale, it'll be up here between 95 and 96. So, that's why you have to change your mind. Like W.D. Gann said, if you don't learn how to change your mind, you won't have any change left. But to me, it could be a double bottom. A lot of the super dollar bulls are looking for well over par. I'm going to take it a step at a time and look for it to rally to this fib level and see this major breakdown. So it's pretty similar to the Canadian structure as well, with the major breakdown being here at 130. So I think the dollar before this rally terminates will be trading up around the 95, 96 level. So that's a wrap. I always end my broadcasts with this. I know trading and your finances are very important, but you have to keep things in perspective. And the way I do that is I tell people not to just count their pips, but count their blessings, because money comes and goes. Time is gone forever. Make it count, and be grateful. Even if you're stopped out today on a trade, do you know that you're in a very good position, hopefully, if you're using risk capital, to even be able to take risk and assume risk? So I'll be back with you guys tomorrow. Good hunting the rest of the day. This is Dale Pinkert. They call me Coach at TradeGateHub.com, where our mission is to build up and edify traders every day. See you tomorrow.